Hey traders. Okay, so for those of you who don't have a setup or winning setup right now, I'm going to give you one. It's a very simple setup. We're going to make it very simple. Okay, and it's the highs and the lows of the previous day. And all we want to do is we want to buy once price pierced the low of the previous day, and we want to sell once price pierces through the high of the previous day. Okay, that's it. Of course, we have a trading time, which is the first 3 hours of each session. So the green box, which is 2 to 5 a.m. EST, and then 8 to 11. And then in Asia, it's 8 p.m. to 11 p.m. as well. Okay, so one price to hit it in our window, which price did in this case, you buy. Okay, once price hits the low of the previous day, you buy. Okay, and in this case, price hit the high of the previous day outside of our window. Okay, now we see price hit the high outside of our window. Now we are above the high, in which case we're going to set, draw level. Price came back to that high at the beginning of New York, and then we see the sell off. Okay, we're above the high of the previous day. Price came back down to the low of the previous day in Asia on the next day, and then we see price auction higher. Okay, the next day comes around, price hits the low of the previous day. Perhaps you take a loss in this case. Next day comes around, wait for price to hit the highs of the lows, price hit the lows. Okay, and then we don't go any higher, so maybe you take a loss in this case. All right, and now with today, price hits the low of the previous day, and then we see price beginning to auction higher. Very simple. This is in gold. Let's look at the pound JPY. On the pound JPY, let's just go a little to our left. We see price hit the low of the previous day at this point. Price auctioned higher. Okay. And then price came back down to hit it. Price came back down to hit it. So perhaps you would have gone break even at this point, or you take the loss. Okay. Price came back down to hit the lows and went sideways. So perhaps this would be a trade where, nothing happens. Really, you go break even, you close your trade in a small loss. Price doesn't, price just went sideways. Okay, in this case, and then the next day comes around, price hits the lows and we auction higher. Okay, in this case, price hits the high and then we fall. Price fell in a window. Price came back down to hit the low in Asia and then we auction higher. Okay, price came back down to hit the low. All right, we're underneath the low of the previous day at this point, and we auction higher as well. Okay, keeping it very simple. Now we have a high, we have a low, we're waiting for price to hit one of these levels, and then you can decide whether to buy or sell. All right, we have the Nasdaq over here, and let's see if it applies to the Nasdaq as well. We see price hit the low of the previous day at this point. This point over here, price auctions higher. Price came back down, hit the low, all right, outside of our window. So perhaps we don't do anything in this case. Okay, we see price come back down, hit the low of the previous day in our window. And then we see price auction higher. Again, we see price come back down to hit the low in Asia. Even though the box doesn't show in this case, this is 9 p.m. It's a prime trading hour. Price hit it in Asia. Okay, we see the stop hunt and then we auction higher. All right, price came back down to hit it. Okay, price came back down to hit it. So perhaps we take a loss in this case. All right, and we see in Asia, price hits the low again, and then we see price auction higher. You're not doing anything else. You're not looking at any other criteria in the sense of trying to identify whether to buy or sell. Once price hits the highs or the lows, you buy or you sell. And of course, you apply sound risk management. Okay, so let's see in this case. Now we here today, we have a high, we have a low. Eventually, price would go and auction to one of these levels. Okay, trapping traders. Okay, perhaps we're going to see price reverse. Perhaps we're going to see a breakout pullback and then price continuing to trend. But again, we're going to keep this very simple. Once price hits the highs or the lows, we're looking to buy and we're looking to sell once price hits the high. Okay, and in terms of entries, many ways to enter these types of trades. It could be on the 1 minute chart. In this case, for example, you could be looking for a breakout pullback and reverse on the 1 minute chart. So yep, on the 1 minute chart, once price hit the low of the previous day, as you can see here, you're just waiting for price to break out of some sort of structure, retest. You can see many breakout, retest, pullback. You can enter any of these boxes here. You can just enter. Usually, I want to see a pullback, especially pullback back into structure, and then break out again. So I want to see the second break out. So I probably won't be entering here. I probably would be entering here if I was to use the 1 minute chart. I'd probably be entering right here. Okay, we see price break out, pulls back into structure, price close below, and then we see our entry candle. And once you get that candle, you're just going to take that and ride that all the way back to the high. Or perhaps you can just use the 5 minutes, the 3 minute chart. 3 minute chart, you can use a breakout of a 3 minute chart. You can use a 5 minute chart. We see a pin bar right underneath the low of the previous day. You can enter with that pin bar right away. Okay, if price hits your stop loss, perhaps you enter again, give it a second try, or you call it a day. Okay, you want to apply sound risk management. Okay, we see another pin bar on a 3 minute chart. On the 1 minute chart, you want to wait for a break of structure. There are many ways for you to enter these types of trades. Let's look at one more example where price hits the low of the previous day. Right at this point, price hits the low of the previous day. On the 5 minutes chart, do we see a pin bar at that low? We see a W formation right at that low with strong engulfing candle. So you'll be entering another engulfing candle. On the 3 minutes, we see an engulfing candle right at the low, and then price pullback for a W formation. Perhaps if you want to be aggressive, you want to be entering at the first bullish candle, the piercing candle. Or if you want to be a little bit more conservative, you can be entering at the W. Okay. And on the 1 minute chart, you're waiting for a break of structural pullback back into structure. Okay, like we explained in the previous example, where price breaks into structure, breaks back out, and then you'll be entering here as well. Placing your stop loss at the swing low, or you can have a max stop loss and just let the market do its thing. Okay, so this is how you can enter these types of trades. But we're just going to keep it very simple. Once price hits the highs or the lows of the previous day, you can enter your trade and look on the lower time frame for entries and apply risk management, money management, and that's it. I hope you guys got value from this. I hope it makes sense. Have a wonderful rest of your trading day and week, and we'll talk soon. Cheers.